Hello, my name is Marc Davenport, the Wealth Strategist, and welcome to Straight to the Top. Every week, we bring on the best and brightest men and women around the country to share with you their experiences and what they're doing day to day to disrupt the various verticals and businesses that they're operating in. Ladies and gentlemen, business moves at the speed of light. There's no such thing as getting comfortable. We want you to win. We want you to take your business straight to the top. How do you do that? Learn how to disrupt the marketplace. Learn how to do the things that others won't do. This is what we talk about every Tuesday on Straight to the Top. Heath Butler, MBA. Welcome back to Straight to the Top. Thrilled that you're here. Felix Chevalier, Attorney Felix Chevalier. Where are you from?
New York.
You used to ride the A train.
Yeah.
Okay. Excited to have both of you here. We have two of Houston's top businessmen and influencers. We have a lot of ground to cover. You know we have a tradition. I don't introduce my guests. Heath, you first. Look into the camera. Who is, and introduce yourself.
Hi, I'm Heath Butler, network partner at Mercury Fund, which is the early stage venture capital fund in town, and I'm also co-founder of Urban Capital Network.
Okay. Felix?
My name is Felix Chevalier, the founder of the Chevalier Law Firm and also one of the co-founders of Urban Capital Network.
Okay. Gentlemen, again, welcome to Straight to the Top. We have a lot of ground to cover. I know who you are, right? I've known both of you for a while, but the audience doesn't know who you are. So before we go really deep into the heart of the matter, Heath, you went first last time. Felix, look into the camera. Who is Felix Chevalier? Who is the man? Let us, inquiring minds want to know.
Sure. So again, my name is Felix Chevalier. As you mentioned, I'm from New York as well. I'm the son of Cuban immigrants. So in my household growing up, Spanish was my first language. I didn't learn English until I was about 5 or 6 years old when I started going to public school. I went to the State University of New York, college at New Paltz, which is upstate New York, about 2 hours of New York City. And then later on, I went to St. John's School of Law in Queens, New York. Right after law school, I moved to Houston, Texas, worked at a couple of companies. I went to work for a law firm where I did commercial litigation. And while I was there, looking back at it, I now realize it was very pivotal, but there were really three key organizations that I got involved with. So shortly after leaving the firm, I started my own law practice doing exclusively transactional work. A friend of mine started a group called Steaks and Stogies, which is a networking group, and a group of friends of mine, and I also started a political action committee. So a lot got started around the same time, and all those organizations are still active today.
So that's a great story. Heath Butler.
Absolutely. Well, I originally grew up in New Orleans. I tried to claim New York, but you guys won't let me since I'm Syracuse. But I grew up in New Orleans. And my parents had retail businesses, and my grandfather had business in the French Quarter, which now my third generation, my cousins run. So it was great growing up in the French Quarter and really getting to understand the nature of entrepreneurialism and business through my parents, and it's pretty much in my genes. I made some really good attempts at being an entrepreneur in my late teens, early 20s. All of those businesses failed, but I learned some great lessons. Graduated in finance from the University of New Orleans, and had a variety of opportunities. Had my management training at United Parcel Service, and did some consulting work, and eventually landed an opportunity with the .com and moving to Houston. And that was in the late 90s, 2000 time frame. And as we all know, the .com became .bust. And I joined an organization which is now called Insperity, and I had an amazing run in management with them over a 14-year period. And more as I got through that career, I realized that my heart was in the entrepreneurial world, and every time I got to learn new lessons related to business, I thought about how that would transition in my own entrepreneurial endeavors as well as other entrepreneurial endeavors. I did my MBA along the way, and in the last 4 years, I had my own venture studio and angel group, looking at a lot of deals, investing money in really good opportunities, and realized some things that were missing in the marketplace. And that really led to Felix and I and a couple of our other partners joining together to kind of build on Urban Capital Network, which we're excited to talk about tonight.
Good. Two great stories, two amazing stories. And, as a business strategist and coach, I tell people, failure, Mr. Adversity is your friend. Mr. Success, he's going to cause you a lot of trouble. And thanks for sharing that with you. So, big question. In business, it's challenging, right? One of the most difficult things a person will ever do is to build a business that makes money, that's profitable. So you have to have something that drives you, a why. So when the going gets tough, you don't toss in the towel, you don't quit, and you don't give up. What's your why? What drives you? And why are you guys expanding your reach and doing some of the things you're doing now?
I would say for me, the thought of building something that is going to last, you might be able to pass on to another generation. Right. One of the keys to success is really being able to focus in on areas where you're passionate about, and finding the mix between things you're passionate about and the things you're really good at. Okay. And through all of my experiences, I've been able to leverage my ability to use both kind of right brain, left brain thinking, being creative, and also being very, very technically sound in some areas to my advantage. And I'm able to pass that on to other entrepreneurs who want to build a business. So those experiences have culminated in, and I now say, helping other entrepreneurs be successful and think through what it takes to be successful and where they might be short in some areas, and how to think through what it's going to take is really the thing I'm most passionate about. And if I was really wealthy, I would do it for free every day, but definitely use that to pay the bills these days.
That time is coming, though, isn't it?
Absolutely, and I'm excited about it.
Good. Felix?
For me, I am certainly, my biggest why is family. My biggest motivator is collaboration. I find that over time, the thing that gets me the most excited is being able to galvanize people who have common interests, and then figuring out ways where we can collectively move forward to achieve whatever goal or objectives we have in mind. I've done that in the business environment, political environment, and also in social environments.
So I want to come back to something because I think it's important. Heath, everything you talked about was rooted in mastering and understanding the fundamentals.
Yes.
And everything you talked about was fostering opportunities, creating opportunities through building relationships, right? Particularly when you talk about in the political arena. Do you guys want to speak to that for a minute?
Sure.
Wow. So I believe that relationships are the currency of life.
Repeat that.
Relationships are the currency of life.
That's good stuff.
It is. I'll use Heath and I, for example, right? We were introduced to each other by a friend in common who's a corporate executive at AT&T. We met probably a decade ago. I think you were still at Insperity at the time.
Yep.
And we just kept in contact. We never hung out, anything like that. Just kept in contact. And probably, I don't know, 9 months ago, he just calls me up one day. He's like, hey, let's have breakfast. I'm thinking about some stuff. Let's just connect. We had breakfast. He shared with me what he had going on. I shared with him what I had going on. And there was some overlap in interest.
Right.
And there was a specific project he was looking to work on. Told him I'm happy to help. And a few months went by, we got together again. And, you know, I shared with Heath at the time, followed up on our previous discussion and said, hey, look, you know, you're looking at creating an investment group. We're talking about creating an investment group. Let's get together and talk about whether or not it's even feasible for us to collaborate and potentially partner and create something together. But all of that was predicated on a relationship.
Collaborate, partner, and create. Collaborate, partner, and create. Talk about the fundamentals. You're a finance guy by training, right?
Finance, investment concentration, absolutely. And the thing about business is that there's one way to get there. There's a lot of paths,
Right.
but there's really only one way to do it, and that's being fundamentally solid. Because at the end of the day, you've got to sell something at a price that's more than your cost, so you can cover all of your expenses, and you hope there's a profit at the end, right? So that's the one way. That's the only way it works. Every business in the world, otherwise they go out of business. So you really got to understand what it takes to then be successful with each functional area. And that's why the fundamentals matter, right? Because you've got to do sales and marketing, you've got to have a product, you have to be able to then have a service component and deliver that product, and ultimately then you need people, right? And people end up being the fundamental, and that's why what Felix is saying, relationships are the currency. That's what actually makes the flywheel go throughout all these functional areas. So when you understand the functional areas and you understand how to leverage that currency of relationship, it really gives you the ability to put it all together and be what we call a business owner. And short of that, you've got gaps in your system, and they're gonna show up because there's competition out there, and the cream always rises to the top. So if you don't have all of these components solid, and you understand the value of building a team around you, as he talked about, we've now collaborated on Urban Capital Network. You have gaps in the system, and competition will take you there.
Perfect segue into what we're about to talk about next.
Absolutely.
Felix and Heath, the Urban Capital Network, right? Founded by you and two of your partners. Why the Urban Capital Network? What's the genesis behind this?
Well, the genesis behind it is that we all realize that, like ourselves, we're busy. You know, we're relatively intelligent people who all wanted to be able to capitalize on businesses that were emerging.
Right.
And like many people, most people do not have access to all the companies that we're familiar with that are on our cell phones, right? So if you're on your phone, you can look at Evernote, Uber, Lyft, Airbnb, all companies that started out as startups at one point. And so the question is, how do we get access to companies like those? And if we had the opportunity, we would take advantage of it.
Right.
But there are two reasons why we don't take advantage of those opportunities. One, we don't have access to the organizations that get the opportunity to invest in those organizations. And then the second part is we often don't have enough capital to meet the capital threshold in order to invest in those businesses. So what typically happens is a company realizes it has lightning in a bottle, and everybody's going to want it.
Right.
What they will do is go to major venture capital firms, and those major venture capital firms will then go to pensions. They will go to insurance companies. They'll go to family offices, and they'll go to their friends. When they are going to these different groups, they're not calling us.
Right.
Because they simply just do not know us.
You're not plugged in.
We're not plugged in. The second part to the problem is that even if they did know us and we got the phone call, they're typically asking for a check that has to have 2 commas in it.
Right.
Okay? And so typically, most of us do not have the ability to write a $100,000 check or a $250,000 check to put at risk.
Right.
And so what we decided to do was essentially solve that problem because we have the expertise and relationships.
And what?
And relationships to address those issues.
Right.
Okay? So on the relationship side, and Heath can speak more to this because he's specifically working with the largest venture capital firm in Houston, Mercury Fund, to help us provide access to their portfolio of companies. But one of the things that we did was we wanted to make sure that we brought something to the table. So as you saw in the most recent press release, we were able to aggregate $1.4 million to invest in Mercury's fund, or their Fund 4. The raising of the $1.4 million was the way to get access to the deals, or to be able to invest.
Skin in the game.
It's a skin in the game. But we were able to do that by going to our friends and colleagues and asking them to write checks by a significantly lower amount that would be feasible for them to risk in order to participate, in order to invest in companies that they would not otherwise have access to.
So you went back into your network,
Into our
of
network,
people
yes.
that you had pre-established relationships with, and you simply did or followed the model that the larger institutions follow, right? You called people and said, look, I have an opportunity to do something that's really interesting. I'd like to talk to you about it at a price that would be more reasonable or affordable. Heath?
So when Felix explains the why the problem exists and how we decided to aggregate additional investors, the other thing that's happening is all of the startups that are creating opportunities, this lightning in the bottle, they all don't turn out to be Uber, Facebook, Google, but a lot of them turn out to create significant value.
Okay.
And in Houston specifically, the other trend that's happening is Houston significantly increasing its ability to be a compelling innovation hub, being the 3rd largest city now in the country. We have an opportunity to build the innovation hub that's needed to help a lot of other entrepreneurs create lightning in a bottle. So we want to make sure we have the ability to be a part of that, and that requires us to increase the number of investors that are interested in and willing to put some capital at risk in early stage companies. But anybody could invest in an early stage company that says they're going to be the next Google or Facebook.
Next big thing.
But who has access to the de-risked opportunities? So that's what people are really looking for.
Can you elaborate on de-risk?
De-risk, absolutely. What we mean when we say de-risk is opportunities where the odds of success are significantly increased compared to the average business that you could invest in. So there are a lot of businesses out there looking to raise capital, but there aren't a lot of businesses that are past the stage where they're more likely to fail than they're more likely to succeed.
How do you do that? How do you find those businesses?
That's the beauty of what we're working on, which is to partner with firms like Mercury Fund to help investors get access to these opportunities that are de-risked. What Mercury Fund sees in Urban Capital Network is an opportunity to reach a group of investors that are now looking for other deals to bring to Mercury Fund. So from a deal flow perspective, talent, our network is full of professionals that may be able to bring value to some of the companies Mercury is looking to invest in. So there are a number of reasons why it makes sense for Mercury Fund to partner with Urban Capital Network. And now that the Urban Capital Network Group is an LP in the fund, there may be opportunities for co-investment into some of the companies that Mercury Fund's investing in. So some of the investors get to participate in the fund itself, as well as potentially co-invest in certain deals down the road. What we believe is that by helping investors get access to opportunities where they're more likely to win, that means they're more likely to reinvest some of their profits into other deals, which helps the Houston ecosystem and helps startups everywhere where they have investors that have participated in their community.
So both of you said a lot, right?
Yes.
And I appreciate the high level viewpoint. So a couple of things. In the money business, it's all about assets under management, right? So in your example, what you've done is you've created a bridge, right, for the Mercury Fund to tap into human capital and wealth that they might not have access to. So from a deal flow perspective, on paper, the deal makes a lot of sense, right? You're a smart guy, you're a smart guy. It would be reasonable to suggest you're connected to other smart people who also would have the financial wherewithal to put capital at risk, right, in a fund that they might not have had access to. So I just want to stop for a minute and just talk about a quick takeaway that I've got, and I'd like for the two of you to speak to it. The best deals in business were deals that are win-win for both sides.
Absolutely.
The best deals in business that are relationship driven and de-risked, so you can focus on the deal at hand and not worry about the personalities of the people at the table because you've checked that box. But when you put a deal together, it's better for everyone if you put a deal together and that when it's done, it leaves both sides feeling good about the deal, about the opportunity, and excited to come back and look at other opportunities to do other deals on. Do you guys care to speak to that?
So, going back to the first part of your comment, what we're doing is bringing in and ushering in a whole new host of investors that venture capital firms would not normally have access to. The benefit to those venture capital firms is, number one, money's green. So they're getting additional capital that they would not have had access to before. It's also smart money because our network is comprised of people who are professionals and people who are centers of influence.
Smart people.
Smart people, right? Engineers, lawyers, doctors, other business owners, entrepreneurs, educators, I mean, you name them. And then the other thing is our pool of investors are across the board, Black, white, Asian, Malaysian, you name it. And so that diversity is of a benefit to the companies that are part of the portfolio within Mercury Fund or any venture capital firm that we align ourselves with, because those diverse employers will be in a position to see things, the diverse investors can see things that others will just not see, right? Just based off of their experiences and
Perspective, different
and
perspective.
And so we're bringing capital that's beyond purely just the money. You're bringing expertise and different perspectives. Heath?
Well, I think that based on everything that Felix is saying, the right summary for what we're doing is that we're democratizing the investment ecosystem for both investors and entrepreneurs. And I think Felix explained why that makes sense for both venture capital firms and for our investors.
Good stuff. Good stuff. Heath, Felix, opportunity, the old word. What I'd like to do is to have the two of you talk about why this method of investing makes sense. Because what we're really talking about are what we define as the emerging markets, small cap stocks. And one of the things I know, since we've kept data going back to 1927, emerging market companies, small cap stocks, have far and away outperformed every other asset class in this country, and the only asset class historically to average double-digit returns. You want to speak to that here?
Absolutely. One of the, as you're saying, the small cap stocks, they generate sizable returns, and some investors, retail investors, can absolutely get access to small cap stocks through Russell 2000 and other means. But privately held companies, early stage, that are venture backed, institutional funding from venture firms, have produced double digit, like high 20% returns year over year over the last 20, 25, 30 years. And that is why we believe that any investor, any accredited investor, really needs to position themselves to get access to venture-backed companies and make that a part of their portfolio mix. It's an asset class that has proven itself, as you're saying, and that's why we wanted to be a part of this particular vehicle, and we feel like we've created a system that makes sense for investors because there's this de-risk nature to it, where we're leveraging relationships, as Felix said, to get access and then expanding that out. So we're really excited about it because we agree with you, and we think it's an awesome opportunity for investors to get the upside, what we kind of call high alpha, low beta at Mercury Fund, and we're pretty excited about it.
Felix, look at it from a different perspective. Many folks are invested in the stock market.
Right.
Many do that through 401ks. And we all hear about diversifying our portfolios to play it safe. But the reality of it is that we're not really diversifying, because 401k just means that you have your money invested in publicly traded companies.
Right.
You have nothing outside of that. And so what we're doing is providing a very feasible way for people to invest in early stage companies that are de-risked, so they can not only diversify their portfolio, but be in a position to get access to the asset class that you mentioned earlier, small cap companies that have a greater propensity for having double-digit returns. Okay, so
makes sense.
So, but people are not going to have access to that if they don't even know where to start, how you can get educated on it, where to go. And what Urban Capital Network is doing is providing people a platform where we're going to first educate them, empower them, and then enable them to take advantage of those opportunities.
Educate first, invest second.
Educate, empower, enable.
Okay. Educate, empower, and enable. Okay. So most people have heard about the rapper called Nas. I have a quick Nas story for you. So about 5 years ago, his net worth was projected to be about $40 million. And then Nas got connected to a couple of smart guys, really smart guys, connected people. They formed a relationship, they collaborated, and they started a fund in Silicon Valley. And the first company in their fund was acquired about 2 years ago by Amazon. Amazon paid $1 billion cash for that company. Nas's net gross before taxes was $40 million. In other words, one deal doubled his net worth from 40 million to 80 million. Since then, there are 3 other companies in the fund that were acquired, right? But that's where you make money. Speak to how you make a lot of money when those companies like that get acquired.
Well, because when a company like Amazon looks to acquire the company Nas invested in, they're doing it for strategic reasons, and they're not necessarily looking at the fact that it's a small company. They're looking at the scalability they're going to take and put that company on their platform and their distribution network. So a lot of times a strategic buyer might be willing to pay a little bit more premium for a company. And those tend to be really good exits. And in this day and age, most startups aren't necessarily going public anymore because an acquirer comes along, either a private equity firm or a publicly traded company with what we call a strategic buyer, like an Amazon will buy them. But Amazon seeing a much bigger opportunity. So when Amazon paid $1 billion for that company, they knew they could probably take it to $10 billion over the next 3 to 5 or 10 years. So they are very excited to pay a premium for it, and that's the excitement of the opportunity we believe that exists for investors. All of them don't become $1 billion deals, right. But at the end of the day, if you're in the business of hitting singles and doubles and triples, those are great too. And consistent, predictable growth is always better than swinging for the fences. But it's always good when you get one to sell for $1 billion.
And look, as someone who grew up in New York, I didn't grow up with Nas, but I grew up on his music. Love Nas, Biggie, Jay-Z. I mean, I grew up on all that, right? Nas leveraged his relationships with companies and people who were in the financial industry, where he was able to invest his money to double his net worth. So when we talk about democratizing access, what we're talking about is taking our access that we have with venture capital firms and providing it to the masses so they can also participate in the wealth building.
So the company that you keep speaks volumes about who you are. And if you surround yourself, or if you're constantly in the company of other people who are focused on wealth creation, who want to leave a legacy behind for their children's children's children's, then there's things that you need to do. If that's not your mindset, if that's not how you're thinking, that's okay. So I have a question for you. You've got this tremendous opportunity. You have these valuable relationships in place. And let's say, for example, I'm watching this show, and this sounds attractive to me, and I'm interested, but I don't know Felix, I don't know Heath, I don't know Marc Davenport. What do I do?
So there are multiple people who may be watching this video. If you're a venture capital firm, on the Urban Capital Network website, it's literally urbancapitalnetwork.com, there's a section where venture capital firms or private equity firms can provide their information, and then we can start the dialogue. Because all relationships start with someone initiating the discussion, and frankly, we're initiating it here, right? So for those who are interested, you can go on the website, provide us your information, and we can start that discussion. Another potential group of people in your audience will be people who are the very people we talked about. Our friends, our fraternity brothers and sorority sisters and co-workers and friends who don't have $100,000 laying around in their bank account, but might be able to put $5, $10, $20,000 in an early stage company. Well, what we would say is go to the website, provide your information, and as opportunities present themselves, you be privy to those deals, and you pick and choose what you want to invest in. You're not obligated to. I'm sure there are other groups that are looking at watching this video. Obviously, entrepreneurs are going to be watching this video. They can go to the same platform, and obviously yours as well.
You know, one of the things that I think we should also talk about is that Urban Capital Network, as I said earlier, is looking to democratize the investment ecosystem in two ways. So one is on the investor front. We've talked a lot about that, but the other one is on the entrepreneur front.
Good.
And we believe that if we can help investors get a positive return, they're more likely to take some of their profits and invest into a company that may not be as de-risked as the first deal we gave them.
Right.
They may be willing to take a portion of their profits, not all of them, but a portion of their profits, and maybe do something that may have a little bit more risk associated with it, only because it's earlier stage in the process and they haven't proven out all of the fundamentals we talked about earlier. One of the problems we have in our community is that there's not enough investment going into underrepresented entrepreneurs, and there's a lot of reasons for that. It's a complex issue, but the fact remains that it's an issue. So at Urban Capital Network, we intend to address both sides of the same coin, and the other side of that is to build a social impact fund that can focus on early stage entrepreneurs. And we are enabling that by taking part of our profits and putting dollars into this fund that we are hoping to have matched through pension funds, endowments, and other organizations that are committed to the cause, so we can make a true impact on entrepreneurs who are underrepresented.
Good stuff. Good stuff. Felix and Heath, great show, great content, great information, and thank you. So, I want to take a step back. Heath, earlier on, you talked about the underserved community, capital, etc. Can you speak to that?
Absolutely. In certain communities, it's not just access to the capital that's missing. You know, everybody knows the stats. You know, venture capital firms have historically invested less than 2% in women and minority-owned businesses, and it's a problem. It's easy to jump on, you know, race or racism related to those issues. And look, make no means about it. There's some folks out there that are either consciously doing or not doing things, or unconsciously doing or not doing things, right? But at the end of the day, as an entrepreneur that may be from one or two of those buckets, you have to figure out a way to persevere. And one of the ways you can persevere is by, as we talked earlier, by understanding the game, understanding the rules. And the base rule is to just have the fundamentals together and solid. The other one is to build relationships, as we've been talking about here, right? The primacy of relationship is, as Felix said, the currency of life. And entrepreneurs need to understand that. So how do you get those relationships? Sometimes I actually recommend that those who desire to be entrepreneurs don't start businesses.
Repeat that.
It's a little oxymoronic.
Repeat that.
Just because you have entrepreneurial desires doesn't mean you should start a business. And the reason is because sometimes the most successful entrepreneurs, they have leveraged all of their experiences to create that successful business. They've seen the movie. A lot of times, the successful entrepreneur playbook looks a little bit like this. They have taken their technical domain expertise, whatever that is they got out of school, and they go get a job, and they are learning what it takes to be a domain expert in that space. Then they take that, they get into management at another company or the same company, especially if it's a high growth company. Usually it's going to be another company that you've gone to, and now you get to see, and typically it's earlier stage. So now you take that expertise, you bring it to another company, and now you get to see the entire movie from the startup to the exit. And you understand all the things that are in place, how you need to build a team, how you need to raise, how the CEO of that company raised capital, how they manage relationships, how they got the different departments going, essentially how they went from 2 or 3, 5 employees to 50 to 100 employees, sold that business. Now you're better prepared to take all of that experience and go start your business. And investors always look at the story. So when you say, I worked at Uber, and then I went to an earlier stage company and I was a part of an exit, and then I went to another early stage company and I was a part of a second exit, and now I've got an idea and I'm building my company, that's a much better story than I had this one experience. And I got really good at I got good at digital marketing. I got good at whatever the domain expertise is. I had an idea, and now I'm trying to raise money, and it says nobody wants to fund me. I can tell you why, right? So the experience is critical, and oftentimes when we don't have people in our community telling us what the real playbook is, we think the reason we can't get funded is because of something else. Right. When the reality is there's just intangibles and things we don't know that we don't know. And when we get better at that, we increase our odds because our game plan changes. And as an investor, we are looking for people that are coachable, people that will listen. I can't tell you the number of conversations I have on a weekly basis where I'm given what I believe is great advice, and the person on the other end of the phone is telling me why they're thinking the way they're thinking and that their thinking should work. So I just shut up and I let them finish, and at some point the conversation's over and I move on and I wish them good luck. But those who will listen and be coachable, they tend to be the best students because they listen, they go back, they fine tune, they come back, and I love helping those people.
It's not personal.
It's not personal at all. It's just business.
That's good stuff. Investors love the story.
Yes.
I think there's a book called The E-Myth by Michael Gerber. Yep. And in the book, The E-Myth, he educates people on what the myth is. And the myth essentially is that, as Heath said, someone may have subject matter expertise, right? They could be a chef, could be a lawyer, right? Who may be great at practicing law, great in the courtroom or drafting documents. Then they decide they're going to go start a law practice. And what they quickly realize, whether it's the lawyer or a chef or someone who has a marketing business, what they quickly will learn to realize is that you need skills to skills. You need different skills in order to be a business owner. And so the story that he talked about, where someone starts with one company and they go to another company and they go to another company, they're learning the business aspects of running a business as opposed to instead of just the subject matter expertise, right? Because the person he used in his analogy could have been someone who's a marketing expert, but they know nothing about finance. They know nothing about accounting. They know nothing about contracts. They know nothing about human resources or how to collaborate or build relationships in order to see the company go from 5 people to 50,000.
The fundamentals.
It's the fundamentals.
You know, it's interesting. We've been talking for a little bit, and there are some words that keep coming up, right? Relationships, collaborations, fundamentals, etc. Are there characteristics that you think are important for a founder to possess? And are leaders made or are they born?
Oh man, that's an interesting one. I absolutely believe that leaders are made.
Okay.
There are certain tendencies of personality traits that some people have and carry that when exercised, one would think and tend to lean toward that they're born. We all have different DNA. We all have traits that we have either naturally gifted at or that we have honed over time.
And experiences.
And experiences. For example, I wouldn't trade my experiences of growing up in the environment I grew up for anything because it's made me who I am. It's also allowed me some things to come natural. And I think everyone out there has those things that kind of come natural to them. But the reality is there's some things that you have to do as a leader as well as a business owner. And I think one of the very foundational elements that's critical to being an entrepreneur and thus hopefully being a leader in a successful business is that you have to be someone that people can trust and that they want to follow, right? Because all businesses are really based and driven by the people.
Human capital?
Human capital, that's the key, right? And I spend a lot of time understanding this space during my run with Insperity in terms of how important people are and the people you bring in. And as a leader, you create a culture. And you have to think about that because either you create a culture or the culture will be created for you. And you wake up and you look and you have some of the businesses that are out there that have run into trouble because they didn't create a culture that produced great outcomes for them and the businesses struggled. Some companies will fall apart, if the business isn't strong enough. So some of them have been able to recover and some of them haven't. But I believe the core characteristic of being an entrepreneur and a business owner and a leader is this notion of understanding the value of people and this relationship concept that Felix and I have touched on so much. And there's a lot of other components, but I'll leave it there and let Felix chime in on it.
You asked what are some of the things you would want to see in an entrepreneur. And I think the first thing I would want to see is coachability. Because again, an entrepreneur is typically someone who has a great idea,
Right.
where they're seeking help typically money, to advance their idea.
Right.
And it's very difficult to work with an entrepreneur who knows it all. Because if they knew it all, or if they realized that if they really knew it all, they wouldn't be seeking help and they wouldn't be seeking financing, because they would have everything in place in order to get what they need. And so, look, to be an entrepreneur, you have to be courageous, right? You have to be willing to put yourself out there, but there's duality in that approach, right? We're talking about leadership. People always look at leadership as being the person who's out there and taking a charge and things of that nature, but leadership is also service.
Okay.
And entrepreneurs tend to focus on the former instead of the latter.
Great show.
This is awesome.
Really good show. Final thoughts for the audience, Felix.
Well, I would say if you are an entrepreneur and you're interested in advancing your business and you would want to get some guidance, go to the Urban Capital Network website and register. If you're a venture capital firm and interested in collaborating with the Urban Capital Network based on what you've heard today, please reach out to us. We'd be happy to collaborate.
Final thoughts.
I want to encourage all of the entrepreneurs out there to focus in on what you're passionate about what you can be the best in the world at, and what really makes you happy, and do your homework, and don't give up, persevere, and we look forward to hearing from you and doing whatever we can to help.
You know what? Are you guys coming back?
Absolutely.
We'll be back, and before we forget, we also want to let investors know that they can also register at Urban Capital Network as well.
And the social media handles, tags, pages?
Visit urbancapitalnetwork.com, and you can get all of the information right there.
And ladies and gentlemen, what we heard tonight was a masterclass. Would you agree?
If you say so.
I'm going to say it for you, right? Because you know what? They're two very accomplished men. They're very professional. They're very smart. But there's a level of humility that they both have that's very genuine. And when you're around people like that, you think about opportunities. You think about ideas and ways that you can collaborate, right? By focusing on the fundamentals and identify opportunities to make money. This is a show I would encourage you not to watch. This is a show I would encourage you to watch and study. This is a show I would encourage you to watch more than once. If you have a partner, watch it with your partner. If you're thinking about starting a business, if you're in business, if you're stuck, if you're having a problem, watch this show. You'll be glad you did. We'll be right back. What an amazing show tonight, and a special thank you again to Attorney Felix Chevalier and Heath Butler, MBA, for all of the nuggets and the insight and just the very, very important information that they shared. We hope that you took a lot away from that. And next week, my guest is going to be Attorney Felix Chevalier. He's got an amazing story that he's coming back to share. Don't miss it. And we'll see you right back here Tuesday of next week. On March 31st, Najia Brooks and I are having a party, and what an event it is. It's a launch party to celebrate the launch of multiple brands. And we are inviting our clients, our supporters, families, and some VIPs to celebrate with us on the 31st. We invite you to become an Are My Client today. Join the movement, get connected, and take your business straight to the top.